What's up, homies? Welcome to another episode of the Homies Real Estate Podcast. This is your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And together, we're going to break down this crazy real estate market. It's the beginning of the month, Angel. What time is it?
It's market update time for the crazy county of Orange.
Whew. Orange County. Like, I always dread doing these market updates because when is it going to stop? Like, when are prices finally going to cool off? When is the real estate market going to finally take a chill pill? But, yep, we're going to do the usual rocket rounds. I'm going to go over all the market data. Me and Angel are going to discuss it, dissect it, give our advice and projections for the future, and then that'll be a wrap. So, with that said, let's go ahead and jump into this Orange County real estate market. Median sales price, it's on the rise, has not stopped. It's now over $1 million, $1,025,000 for a median sales price in Orange County. That's an increase of $35,000. That's up 20% year over year. Last March, we were looking at $850,000. When we look at median price per square foot, another really good indication of whether prices are really starting to go down. Yep, they're increasing, right? It's up almost $20, $21 since last month. It's up 26.5% year over year. So it's at $615 last March. It was at $486. When we take a look at active listings, so how many homes are available to be purchased right now on the market? 2,766. That's down about 30% from what we saw last March. And historically, it's down, about 1,500 to 2,500 homes than what we saw, pre-pandemic levels for the last 5 years. So we have a lot less active listings. Yeah. When we take a look at inventory month supply is how many homes or how long will it take for the current homes that are available to be purchased to be sold, right? And right now, it'll take 1.1 months. Now, that's incredibly fast. In a balanced market, we're talking about 5 to 6 months. Mm-hmm. And then in a buyer's market, we're talking about 6+ months. So you can see that we're in an exceptionally strong seller's market. When we take a look at median days on market is as low as it's ever been. 6 days on market. What that means is you really need to be on top of your home search. You really need to be pre-approved ahead of time. And you really need to be putting really strong offers because you can see there's a really, really small window for negotiation. So that's what the market looks like. I want to go over something real quick. Pending sales. So let's take a look at what the pending sales looks like. Closed sales. So we can see closed sales right now is about 2,700 for March. Historically, we're going to skip 2020 because 2020 is a weird year. Last year, we had about 3,220. In 2019, 2,300. In 2018, 2,600. And in 2017, 2,800. So you can see that we're pretty much on par with the amount of closed sales than what we saw in 2017, 2018, 2019. So the narrative isn't necessarily that there's less home sales, because there's the same amount of home sales as you can see. It's just that homes are selling a lot quicker, 6 days on market, right? There's so much more buyer demand than there is supply. Angel, what catches your attention about this real estate market here in Orange County?
Nothing I haven't said like the last all these live podcasts. Orange County is absolutely insane. Doesn't slow down. Mm-hmm. If anyone's been listening, rates have gone up. Doesn't matter to them. Neither LA County. We just did LA County, same thing. Mm-hmm. Things going up, but 6 days on market right now. It's insane. And it was funny. I've been thinking about I feel like the market's been more competitive than it's ever been. And it's been really competitive, obviously, over the last year. Mm-hmm. But specifically these last couple months, February and March, mm-hmm. I was just like, I feel like it's just a lot more competitive. And based on what the market updates that we're going over today, what I was feeling was correct, right? It's just it's been more competitive than ever, despite interest rates going up. And I mean, interest rates going up drastically, mm-hmm. right? December, we're looking at rates Conventional rates, they're already going up a little bit, but they were in the low threes. Now we're looking conventional rates as of today, depending on your scenario, some approaching 6%, which is insane, right? And with the increase in rates, it hasn't done anything to the market, right? Just because of the simple fact of supply and demand.
It almost seems like, hey, interest rates are higher. We don't know how high they're gonna go. Everyone, let's just rush the market and try to get a home before interest rates go even higher. That's what it seemed like happened, because I mean, we've seen incredibly strong increase in median sales price, right? From 950 in January 2022, so just 2 months ago, to now $1,025,000. That's a $75,000 increase in just 2 months, right? So that's a really, really strong increase. That's typically what some counties see in a whole year, and you get it in 2 months in Orange County. This is the type of market, that we have here. And it's just really crazy to see that median sales price is, median days on market is just 6. Like, jeez, like
not even a week.
Yes. So you think about it, a home hits the market on Friday, and then by Thursday, they're already opening escrow.
Yep.
So for those buyers that are actively looking, if you're looking in Orange County, you want to make sure that as soon as a home hits the market, you have your realtor schedule that showing, or you schedule, figure out a date to go to those open houses and then make an offer day of. Yeah. Because remember, there's always like 2 or 3 days for negotiation. So let's just say a home theoretically hits the market on Friday. By Monday, they're reviewing offers, a couple of days of negotiations, and then the median home will be on an escrow by Thursday.
Yeah.
Yeah. So that's what the real estate market in Orange County is looking like. Angel, anything else that really stands out here about the Orange County real estate market, or not really?
Honestly, not necessarily. It's just kind of been the same over the last few months. So nothing that we haven't mentioned. It's just being ready, and like I mentioned in the LA County market update, very curious to see how the market goes over the next couple months. Because again, this is the March update. So what that means is interest rates were most likely locked in February or beginning of March, where rates were substantially better than they are right now.
Yeah.
Right. So how is the increase in rates going to affect, not only Orange County, but all across the country, right? Is there going to be any type of slowdown in appreciation? Is there going to be any, depreciation, home values going down? I don't see that happening, but very curious to see how it affects the market over the next couple months with the drastic increase in rates.
Yeah, that's a great point. So Angel mentioned that a lot of these home sales for March, right? Because we're looking at March data, they were locking in their rates either very, very early on in March or the latter part of February. Interest rates are different right now as we speak, the beginning of April, than they were about a month and a half ago. Right? They're 1%, maybe 0.5% more now. So how is that going to impact purchasing power? How is that in turn going to impact the median sales price? Are we finally going to see like median sales price start to finally cool off? It's going to be a very interesting thing. So, I'm glad you brought that to our attention. And I want to pose this question that I posed on the Los Angeles County real estate market. And me and Angel kind of came to a consensus as to what we believe is going to happen. But here's what may happen, and here's why, although interest rates are high, it may be advantageous to really try to get a home sooner than later. Because interest rates right now are in the 5%. Pre-pandemic, interest rates were closer to 3.5%, in the high 3s. Very likely, once inflation cools down, we can see those interest rates drop from the mid 5s to now under 4%. As interest rates decrease, purchasing power for buyers increases. And this is exactly what we saw during the pandemic. During the pandemic, interest rates dropped from 3.54% to now 2.5%, in the low 2s. That was a drop of over 1%. And because of that drop of over 1%, typically a 1% drop in interest rates increases someone's purchasing power by about roughly 10%. So that's why we saw homes selling for 10, 15, 20% more than just a year prior, because they now qualify for a lot more. So if interest rates drop from the 5.5% ish to now, let's just call it 4%, so that's another 1.5%, buyers' purchasing power goes up 10-15%. Home values in turn go up another 10-15% because they can now bid for homes. Anybody that purchases a home right now at 5.5%, when those interest rates drop, can see a significant amount of appreciation once those interest rates go down. I hope you followed me, homies. I hope that made sense. Maybe I'll make a YouTube video soon about it. That way I can illustrate it a little bit easier. But Angel, do you think that's a very realistic expectation, something that may happen? Yes?
Yeah, so everything Anthony said is, in my opinion, that's what is going to happen. Is right now, again, rates are high. Everything's my opinion, and I can't stress that enough, right? Professionals were saying, we're going to see rates and maybe hitting the 5s towards the end of the year. It's already April and we're already almost close to the 6s. So nothing's ever promised or guaranteed, but again, I really believe, and I know a lot of economists and professionals believe that rates are going to drop probably towards the end of the year, or maybe in 2023, rates will come back down, right? How low? We're not going to go to pandemic level lows, but pre-pandemic level lows, or even if you're getting a rate right now at 5.5, 5.6, and the rates go down to 4.2, there's a lot of savings to be had there, right? So I agree with Anthony 100% that, it's a risk, of course, and whenever you're purchasing a property, there's always risk to it, right? But if you get in the property now, I don't think homes are depreciating anytime soon, right? So you get in the home with, let's just say a 5.5% interest rate, right? And let's say January comes around, rates come back down. Let's say at a 4.25%, kind of how I mentioned. You're going to be able to not only drop your interest rate 1.25%, which in turn is going to save you most likely hundreds of dollars a month on your monthly payment, but you're going to already have your house, right? When rates come back down, guess what's going to happen? Everyone's going to hear about it in the news. Everyone's going to go get pre-approved, right? People don't want to get pre-approved right now. And I mean, we still have a lot of people getting pre-approved, but I think as rates continue to go up, there's more people are going to be discouraged to go out and get qualified, right?
Yeah.
And I feel like I'm feeling that a little bit right now in my business, where less people are wanting to buy right now because they think it's a bad time, right? Me and Anthony always say there's no bad time. It's whenever you feel you're ready. There's no bad or good time, right? But again, if you get in now at 5.5%, and then the rates go down to 4.25, you're going to be able to save money on your monthly payment. You're going to have your house already, so chances are you're going to have less competition. And then number 3, you're going to have equity already. Chances you can drop your mortgage insurance, right? Or hey, even if you don't drop your mortgage insurance, at least you already have your home, right? And you already gained equity. So in my opinion, get in now, and worst case scenario, or I think down the road it's just going to make sense to refinance anyways. Remember, most people refinance their home within the first 7 years of owning it. Your first loan is most likely not going to be your last on your house anyways.
Yeah, that's great advice, Angel. And then I just want to really encourage you home buyers to just keep your head up. Know that it's a very aggressive market, especially in Orange County, and that know that you're more than likely going to have to lower contingencies, remove contingencies. Make sure to work that math out. Make sure to be on the same page as your realtor and your lender. Really listen to their advice, and you got to kind of follow your gut sometimes, right? Like if you feel like this is the right home for you and it's worth going all in, by all means do it, because this market's not for the timid. This market is for the people that
really want a home.
Have some assertion behind what they really want.
Yep.
So with that said, Angel, where can we find you at?
At Your Mortgage Angel on Instagram.
At Your Mortgage Angel on Instagram. Dropping knowledge all the time. You know where to find us at the Wevanos Group. Home video tours, podcasts, educational videos. You want it, we got it. With that said, I want to wish you all the best. Thank you, homies. Take care. Have a great day.
Thank you.
Hey, homies. It's Anthony. This podcast contains my opinions and is for educational purposes only. It does not guarantee any projections and should not serve as a basis for any purchase or sale in real estate.